We have S Naren, the Executive Director and Chief Investment Officer at ICICI Prudential AMC, who joins in now. Naren, good morning and thanks as always for being with us on CNBC-TV18. The macros have picked up in a big way and our markets are also virtually at all-time highs. How are you feeling about the situation at hand? Do you think we could build on to these gains? And if yes, what would the triggers be here on?
India is the best structural story at this point in the world because you have a very, very powerful macro. If you look at fiscal, current account, inflation, growth, the entire dynamics at this point of time is extremely supportive at this point of time for India. And geopolitically, we are also very clearly in the middle, and that also helps us a lot. In this stage, the biggest challenge for someone who is more value-oriented and contrarian is what premium do you give? And that is the challenge at this point of time. So are we in a situation where it is possible that we have higher valuations than before? It's quite possible at this point of time. And that is the dilemma that we have at ICICI Prudential because we are not managing our money, we are managing public money. And it's quite possible that markets can trade at higher valuations than what we normally see because we have one of the best confluence of macros at this point.
Naren, hi, good morning. And that's so well put. Best structural story. But that also means that the market will always be expensive, right? For so many reasons, for the growth, but also for the kind of companies which are out there. We'll just come back to you, Naren. I think we're just hitting market opening, so we'll just look at the rates and how things are opening up and just be right back with more questions in just a bit from now. Just about 30 seconds now, Sonia, to open.
Yeah, looks like it's going to be, a market opening in the green. The Nifty, of course, has been facing a bit of resistance at that 18,600 mark. So let's see how that goes. A lot of auto stocks have been doing well this morning as well. You have names like TVS Motor, Eicher Motors, all trending in the green now after a good set of numbers that have come through. And, a couple of these names like Gatti, etc. could also be in focus. But let's see how it goes. We have a couple of important data points from across the globe coming later in the evening, like the US jobs report. So all eyes will be on that. But here's the first tick on the index. Well in the green, 18,557 is what we're seeing on the Nifty. And the Sensex holding pretty above that 62,500 mark. It's the Bank Nifty that's gaining from the front, or leading from the front rather, 0.5% higher on the Bank Nifty, and the mid-cap index is also trending ahead about 0.5% higher. The advanced decline ratio is well in the green at the moment with almost 1,700 stocks on the advancing side. The street definitely likes the auto sales numbers, so Hero MotoCorp is your top gainer right now, up almost about 2%, followed by a couple of these names like Eicher Motors that are also trending in the green, TVS Motors looking good in the broader markets, and we'll talk about that in greater detail. We also have banks that are pushing from the front. So Kotak Mahindra Bank is up almost about 0.7%. So looks like a secular move. A couple of these oil and gas names like ONGC are also trending in the green right now. Good opening, decent opening for the market. The Nifty, in fact, holding on to that 18,550 mark as we speak. And looks like the broader market setup is also pretty decent.
Yeah, but let me just round up some more names from the large cap space. While, of course, auto is in lead position, Hero Motor now is the biggest winner on the Nifty, 2.5% higher. Check out metals. That's the other major trade this morning. Manisha was telling us about how prices have started lifting up. There's generally better sentiment in China as well this morning. Hindalco is up about 2%. Tata Steel is up about 1%. You have JSW Steel that's rallying through as well. So metals and auto, these are the two big trades of the morning as things start off. Reliance is lending some support to the market, about 0.5% higher last time I saw it. So that's another strong pillar that continues to work. Infosys is down. It's actually the only IT stock that's in the negative right now. Others aren't that bad. I think this is also a fallout of the dividend. Yes, Infosys has gone ex-dividend today. And therefore, there's some pressure on the stock, 1% lower. IndusInd Bank, again, is a dividend fallout. It's a pretty big dividend that they've paid out as well. So that's a 1% drop on IndusInd Bank. So you rule out these two, and then it is a very, very solid opening, 70 points higher on the Nifty. Let's look at some of the stocks that have been in the news as well. You have Moil, which is up 2.5% on some of the price hikes that they've undertaken. Aditya Birla Capital, where promoters are infusing equity in the company, 1.5% higher. Aster DM looking to make some acquisitions in the hospital space, 1% up over there as well. Info Edge, by the way, is now absolutely trending fine, 0.5% up. It was a little wobbly in the pre-open, but again, the clarity is that they've already provided for it. They've taken the impairment in the third quarter. So this is not fresh negative news in terms of, more of an impairment or more of a financial damage. That's how it's playing out for the time being. Mid-cap markets up and away. 0.5% of a gain already on it. On the volume charts, is there anything that stands out? Zomato, maybe it's the weekend factor. Suzlon is continuing its good run. And there's some buying on NCC as well, early buying. That's visible. But Prashant, a pretty green-looking screen, at least for now.
Absolutely. 67, 70 points on the Nifty. We are at 18,554 as things stand. I don't know if you guys mentioned Cyient. Cyient is up another 5.5%. Is just gone berserk. I mean, there's no other way to put it. But what a move. 80% this year, 78 point something this year. It's so many stocks have seen a complete re-rating from that space. The other one is nuclear software, which this year is up 200%. This year, I mean, 5 months. So just quite something. Zensar Tech is another one, which is up 85% this year. These are smaller, tech companies, very small tech companies that we're talking about. Westlife is continuing from yesterday's 7-8% gain. It's starting about 1.5% higher. And there is Campus, which is up about 1.8. Campus has been selling off last 2 days after results, and it's up about 2% or so.
By the way, the mid-cap index is now at a record high. So, there's so much traction in the broader markets. And Surabhi was talking about the weekend factor for Zomato. I don't know about you, but it's a through-the-week factor. Swiggy, Zomato and all of that, right? I think weekend is more like PVR, perhaps United Spirits.
And Lemon Tree and the likes, right? You guys were having that conversation earlier, I think hotels and hospitality. Actually, let's just take that question to Naren. Naren, we've been discussing this and the numbers are there for all to see, right? The way the hotel companies are sounding, and most of them are saying that the average room rates are 25 to 30% above the pre-COVID levels as well. Is this a space that interests you? How would you play, let's say, the top end of premium urban consumption?
No, I think the top end of premium consumption is in great shape. Over the last few years, it's done extremely well. And there doesn't seem to be the top of the cycle yet reached. But it's again tough from a valuation point of view, how to buy it at this point of time. The tougher what we're doing at this point of time is saying, okay, we will not sell it. But how do you buy it? Because if you look at most of them, they have actually gone up more than 100-200% over the last 2 years. And that's why we would say that we would not buy it right now, but maybe we won't sell it. And we are also helped by the fact that, in this geopolitical middle, we had the G20 coordinator. So we have so many G20 events. You have a World Cup coming. So many other positive developments which are also helping many of these sectors like hotels and airlines. We're seeing consolidation in the airline industry. So that is another positive. So we've seen so many positive events in these areas. So I think clearly this sector is going to do well, but the sectors are not cheap at this point.
So Naren, you're saying across the board, companies catering to the premium segment will continue to do well, but they're pricing it in. I mean, it's in the price, mostly across the board. So while you may not sell them, they become difficult to buy as fresh buys.
Yeah, absolutely. We are believers, in Howard Marks' school of cycles. So most of the time, we are trying to see what can be bought at the bottom of the cycle or towards the bottom of the cycle. And today, what we find is there is nothing towards the bottom of the cycle. I mean, there were a few like auto, for example, which was towards the bottom of the cycle. So what we did was we launched a transportation fund last year, and you can see the way auto stocks have been taking off, actually. Then we felt that, some of the innovation and growth-oriented stories were doing very badly from the time of listing till now. So we launched an innovation fund. Now you can see that even innovation and all those new age have also started to go up. So almost there is no area where we are able to see in India, which is at the bottom of the cycle. The only areas where we're seeing at least some level of fear is in IT and pharma. But in IT, we don't know how ChatGPT and those kind of things will play out. So maybe we like pharma as one of those sectors where we find that
Sure.
things are. And from a cyclical perspective,
Naren,
people like power.
yeah,
Yes.
Naren, sorry to interrupt you. I mean, I just want to talk a little more about pharma to understand what's happening here. Because, you know, there is a lot of caution, right, in the system. If you look at, say, the diagnostic companies, there's so much competition there. In some of the other companies, there's pricing pressure from the US, which is still sort of marring their earnings. How do you decide what to buy in pharma now? And is it just a valuation game or is there growth upside as well?
So that's why at the bottom of the cycle, you have companies going bankrupt in US. So that's happening at this point of time. You do see some companies doing very badly in US. One or two generic companies have actually closed down. And you can see a fair amount of pricing pressure has happened. And the questions that you raised itself give room for the fact that you are towards the bottom of the cycle. And there are hardly any sectors towards the bottom of the cycle at this point of time. So that is why, you know, between the fact that generics is hardly done well, actually. In fact, if you look at some of the global generic players in US, they're all trading at even below 5 PE at this point of time. So which are just pure global generic players. So I think that is an indicator that some of those stocks are really towards the bottom of the cycle. And that is the rare areas, I would say, which are towards the bottom of the cycle at this point of time. But, you know, India is such a deep structural story that for you to look for something at the bottom of the cycle is very, very difficult. Because when you talk to anyone from foreign brokerage at this point of time, and I'm sure you can get any amount of research report showing at this point of time that India is the best structural story at this point of time in the world. So it's very difficult to find any bottom of the cycle stories at this point of time. And that's why, you know, in our team, when we look at most of the research reports, anything which is India driven has moved from focusing on valuations which are based on earnings to valuations which are based on EV/EBITDA, which means that you're not focused on valuation based on earnings. That's a very interesting development which is seen in any big up markets.
Okay, got that. So the trouble seems to be finding themes and ideas which would be at the bottom of the cycle. Of course, you have always been a big proponent and a big believer in the contrarian way of approaching the market, Naren. Let me, turn the focus to financials, because now one hears, a slightly young new debate, a debate about whether the best of the margin profile is pretty much behind us, and B, whether there is a lot of risk, perhaps, that would be building in the system because of the kind of lending that's taking place, Naren. Fitch put out a report earlier, I think, day or two back, highlighting some of these issues as well, because a lot of it is unsecured lending. It's on the retail side. That's the part where banks have built their books, in this cycle at least. Does that concern you at all? Would you look at any kind of profit taking at all? PSU banks, private banks, or even NBFCs?
See, what Warren Buffett has written for the last 25 years is that this is a sector where you have to invest more carefully. And because it's a leverage sector. And our view is that if you look at the way Indian banking sector is, the top banks have been lending to only the safer segments of the market. And if you look at the corporate sector, there have been most of the corporate sector lending is extremely safe compared to what it was 15 years back. So that segment is safe. The top of Indian people who are borrowing is safe. Most of the mortgage lending is safe. So I believe that, people who are doing prime lending is very comfortable. And in that area, that is one of the few areas also where valuations have been also more reasonable. So, for us, both financials and power are two sectors where we find, again, more comfort because valuations are very comfortable in financials. Of course, there is a problem that margins in financials have been high. That is, net interest margins have been high and NPLs have been at record lows. So those are two small problems with that things have been very, very good. But otherwise, I would say at least the valuations are very, very reasonable in the context of the past. And that is a real positive, along with power, where, power is a long cycle industry. You can't put up a power plant overnight, and power demand keeps rising. And for 3-4 years, there was almost no power plant put up. So, we're going to have a fair amount of demand for power over the next 3 to 5 years emanating out of everything. And so I believe that financials and power are two sectors which are definitely looking interesting. And financials on account of valuations and power on account of cycle. And we believe that these are two other sectors that one can be positive on. The only trouble with financials is not fundamentals, it is technicals, that if at some point of time there is a global correction which forces the FIs to sell, financials are the biggest part of the portfolio. So the problem is not fundamentals in financials. The problem is only that it is the largest part of any foreign institutional portfolio at this point of time. It can be a positive also. So that if they have $10 billion and they get $1 more billion, they'll put 30 to 40% again in financials. So that is the financials.
No, got that. A couple of questions, Naren. In financials, you would stick with banks or you would look at newer niche areas, microfinance companies, for example, we hear a lot about nowadays, NBFCs.
See, we can look at them, but they are not scalable opportunities when we are managing large amounts of public money. So, in that area, you can put small amounts, not large amounts. And then, the amount of research that you have to do if you are going wrong is also much higher. Financials is a scale game. When we invest in India's largest and best banks, it is much easier because you can put another $1 billion to work of public money without having to worry too much. So that's why we are focused on the large banks, but we are not against having some small investments in some other parts of the cycle. And at this point of time, it appears that even the other areas are doing well, but the other areas require much more bottom-up research on a continuing basis. And currently, of course, many of the other areas are also doing well at this point of time, which includes microfinance, vehicle finance, etc. And we are luckily not in fintechs and those kind of areas. I think those areas have seen much more problems, but we are not in them because we are only in listed securities.
No, got that. By the way, Zomato is up 7%. It's the top volume traded gainer. Stocks at about 72.5 or so now. So it's doing very, very well. I mean, actually, I was looking at how earnings expectations have moved after the fourth quarter earnings. PB Fintech, Zomato, Delivery, these are the kind of names which have seen some of the largest revisions higher for full year FY24 earnings after Q4 numbers. So that's interesting. And Naren was making that point as well. We've been talking about this pack with him over the last many interactions. And, he's gradually been, warming up to the sort of these talks and these ideas. I remember, Naren, you telling me that you've delegated this to your team, right? And they're looking at it and you've given them a free hand. Okay, I want to come back to something that you said the last time you were on the program, Naren. You said that we are in a low to moderate return environment. You spoke about how this environment is different compared to the past. The past we had printing presses on, etc., which is not the case. And for solid returns and high returns to come, we need the presses on once again. Has your view changed, Naren, from the last time that we spoke, or you still believe that? Contextualize your views now. Go on.
See, in between, what has happened is that the Japanese central bank has been printing a lot of money in between when they bought bonds. And when the Silicon Valley Bank and the First Republic Bank issue happened again, the Fed actually gave a lot of money again, but not at zero rates to the system. So I think in between there has been again a lot of money dispensed by the global central banks. Again, I think they're going to stop it. So our view is that, we are in a lower return environment because first of all, you have to remember across the world, we are not in a zero rate environment. So you can invest in debt and get 4-5% very easily across the world, except in Japan. And we think even in Japan, it's possible that towards at some point of time, they'll say that we can't keep on printing money in the scale that we have done. So what happens is that results in a situation that we will move to a more moderate rate environment, because you're not going to be able to print money on the way that we did between 2008 and 2021. And the side effect is clear. The side effect is inflation of printing money. And that results in a situation where I think we will move into a moderate return environment. But today, what has happened is it's been a structural. So money keeps coming in, and that's why you don't see it. But periodically, we will have these corrections, and then the market will move to a more moderate return.
Naren, just to take that point, you've also been advocating, flexi funds, investment into debt, etc. Does that view remain the same to be able to switch from one asset class to the other, or is equity looking?
We have been recommending clearly categories like equity savings, balanced advantage, equity and debt, balance and multi-asset, along with flexi cap funds, because what we believe is that the next 3 to 5 years will see fair amount of volatility. So if we have products which can allocate money between equity and debt, you're likely to have a much better environment. And if you have products like flexi cap category or multi-cap category, which again can allocate money between large, mid, small, again you will have a much better category, because right now, of course, mid cap and small cap are doing well. But if you have monies which can be allocated between the different capitalizations, we believe that the next 5 years can be much better, both in capitalization and in asset classes. We believe that flexibility to have a better opportunity, because it is not that it is going to be straight one way. Right now, it appears to be straight one way after March 31st. But you go to the period December to March, it was not like that. It was actually straight one way the other way, that markets kept coming down.
Naren, before we let you go, Prashant was briefly mentioning Zomato, right? That stock is up almost 7% right now. And Jefferies, in their greed and fear note, once again reiterate that they've added Zomato to their India and Asia ex-Japan long-only portfolio list last week. It's also because Zomato has turned profitable in their food delivery business, but they now compare it to the Chinese shopping platform, the app Meituan, where they say that Zomato's market cap is now $7.1 billion. And if you compare it with the market cap of Meituan, which is its nearest equivalent in China, their market cap is $90 billion. So there is perhaps a big headroom for growth. Do you think this argument is valid? And what do you do with some of these names?
See, actually, we have had an open approach. If you see our published portfolio, you'll realize that what we did in some of these stocks. And you'll find that we've had an open approach. I've used some of my younger colleagues, growth-oriented colleagues, to take a balanced approach into many of these stocks. And so that's how we have approached these stocks. And but we have to be conscious of the fact that India has a certain GDP, some of the other countries have a certain GDP, and the market structure doesn't need to be the same. And we'll have to be conscious of many of these things. At the same time, you can't say no to everything. You can't say yes to everything. And that approach, I think, has worked for us last 2 to 3 years. And that's why if you see our published portfolios, you'll see different new age stocks also in the portfolio, whereas just after listing at some point of time, we didn't have them. And that is the approach that we have, because we have to be always conscious we are managing other people's money. And we have to be conscious of the fact that we are not paid to take extreme risks, because as long as we manage risk well, we can always get more and more money. And that is our approach that we have had at ICICI Prudential over the years.
Naren, always a pleasure listening to you. Thank you so much for joining in and talking to us about a whole host of themes, subjects, and areas that are very interesting in the market. Really appreciate you joining in.